This is Insight AI. I'm not a journalist or a politician. I'm just a blue-collar worker who wants straight answers, so I use AI to break down the news without the spin. If you want the world explained without picking sides or pushing agendas, you're in the right place. Rent keeps rising across the country, and for a lot of people, it feels like the ground is shifting under their feet. But this isn't happening because of one single reason. It's a combination of forces that have been building for years, and now they're all hitting at the same time. Today, we're breaking down the real reasons rent keeps climbing and why it's becoming harder for regular people to keep up. The first thing you need to understand is this: we don't have enough housing. For more than a decade, the U.S. has been building fewer homes than we actually need. Population keeps growing, but construction hasn't kept pace. And when you have more people competing for fewer places to live, prices rise. It's basic supply and demand, but on a national scale. And the gap between how many homes we need and how many we actually have is the largest it's been in modern history. But even when builders want to build more housing, it's not easy. The cost of construction has exploded. Lumber, steel, concrete, labor, insurance, everything is more expensive than it was just a few years ago. Developers aren't charities. If it costs more to build, they charge more to rent. And those higher costs get baked into the price of every new apartment that hits the market. So even affordable units start off expensive. Then there's the rise of corporate landlords and large investment firms. Over the last decade, big investors have been buying up single-family homes, apartment complexes, and entire neighborhoods. They renovate them, rebrand them, and raise the rent to match the highest price the market will allow. It's legal, it's profitable, and it's happening everywhere. And when big players set the price floor, smaller landlords follow. Another major factor is zoning and local regulations. In many cities, it's incredibly difficult to build new housing, especially multi-family apartments. Zoning laws restrict density. Permits take months or even years. Neighborhood groups fight new developments, and every delay adds cost. When it takes years to get approval to build, supply stays tight. And when supply stays tight, rent goes up. But even if we fixed all of that tomorrow, there's still one more problem. Wages haven't kept up. Rent has risen faster than income for more than a decade. So even if your paycheck stayed the same, your rent didn't. And that gap between what people earn and what housing costs is widening every year. It's not that people suddenly became bad with money, it's that the system changed faster than their income did. And here's the part nobody wants to say out loud. The entire housing market is built on the idea that prices will keep rising. Investors expect it, developers expect it, cities expect it, and as long as demand stays high and supply stays low, the pressure on renters isn't going anywhere. So when you put it all together, low supply, high building costs, investor ownership, restrictive zoning, and wages falling behind, you get exactly what we're living through now. A rental market that feels like it's drifting out of reach for regular people. And unless something changes at the structural level, rent isn't just rising, it's resetting to a new normal. Thanks for watching Insight AI. I'm just a blue-collar guy trying to understand the world, and I figure a lot of people feel the same way. If you want news without the politics, the drama, or the BS, stick around. More simple breakdowns are on the way.